So COVID has really impacted the last couple of years, obviously, and it's impacted so many people, so many industries, and it's affected the real estate industry too, and not necessarily in a bad way, but in other ways that we just didn't predict. So we've made adjustments and we've persevered. And when we start 2022 now, I want to take a look back at what happened last year, what the market was like for sales and rentals, and kind of look into what we predict is going to happen not only in our local market, but kind of more on a national level. So if you're in the market to buy a home, sell a home, or looking at possibly buying an investment property, this is a place for you because I have some information to share with you that I think could help you make the right decision for you. If you're looking for great landlord tips, I hope you'll subscribe to our channel because that's our goal here, is to share information that can help you be a more successful landlord and investor. So keeping up with sales and rentals is a big part of what we do in my management company. I own a management company, a property management company for residential homes in Northern Virginia along with my husband. And part of the thing that we pride ourselves on is really having a really good pulse on the sales market as well as the rental market. Having this knowledge and being able to, give this information to our owners when we know that there's something that they need to do, they have a life event, they need to sell, is this a good time? And they ask us these kinds of questions. We want to be able to advise them appropriately. So whether you manage your own rental property or you have someone else doing it, make sure that you stay up to date as much as possible on what's happening in your area and when is a good time to purchase another property or to sell. Okay, so let's take a look at what was going on in 2021. In our local market, which I'm sure was probably the same thing happening in your market, sales were going crazy. There was not enough inventory for buyers, and the prices were going up and up and up, and people were getting 20 contracts and the prices were going crazy. It was kind of reminding me of 2005 again, but there's obviously, we have so many more guidelines now and things to protect the craziness that was happening, but it was pretty crazy. So I think, that definitely deterred some buyers from getting into that mess, but it was absolutely phenomenal for sellers. Now, as far as rentals go, in the rental market, we were seeing a similar thing. In our area, rentals that were priced well, that showed well, they were going fast. And there was not really a shortage, but there was definitely lower inventory than we're used to, and things were moving very, very quickly. The good thing about 2021 and what we expect to see carry into 2022, at least for a short time, is that interest rates were amazing. So I think, whilst it deterred some buyers, there definitely were opportunities for other buyers because the rates were so good. It was a great time to refinance and cash out an investment property or cash out your primary residence, pull some cash out and refinance and purchase something else. So let's talk about interest rates. I think what we're going to see is the continuity of low interest rates carrying over from 2021 into 22, probably through the first half of the year, roundabout. I think that they'll probably stay in those low 3% range. And I think if you're thinking about buying or looking at that, probably doing it sooner than later is probably a good idea, because just a small change in the interest rate can significantly impact your monthly payment, can definitely impact the cash flow on a rental property because the rent is going to be what the rent is. But if your mortgage payment goes up, it shrinks the cash flow. So it's going to be important to think about those changes when you're looking at what you want to do. Also, if you are looking at just buying in general, we still expect prices to be going up. So it's not really expected to level off or go down anytime soon. So if you're thinking about it, I'd do it sooner than later. The other change we've seen with regard to loan limits is that Fannie Mae increased the loan limits to $980,700 for conforming loans in the DC area. If you live in a major metropolitan area, there's a good chance those loan limits are also increased to that amount. What this means for buyers is that you don't have to get a jumbo loan if you're going to buy, a nice size property. Those you can get with jumbo loans, you typically means there's more restrictions and more hoops to jump through. It also can mean higher interest rates and just a lot more complexity to it. And so with the loan limits increase, it makes it a lot easier for buyers to purchase larger homes in a much with much more ease and cost savings. Okay, so what this can also mean in terms of these interest rates going up, it's something definitely to watch. But if you're thinking about buying something and you're looking at doing it sooner, you get the advantage of a low interest rate. Another opportunity for investors, though, is that with the increased appreciation, there's so much more equity in people's homes. So if you own a primary residence and you've just been sitting on it wondering whether to buy a rental property, there's a good chance over the last couple of years that your equity has significantly gone up. You can take a HELOC, home equity line of credit. You can do a cash out, refinance of your home and pull cash out. Use that for another rental property, and you could really diversify and start to build out your real estate portfolio. Okay, so let's talk about inventory. I think what we're going to see is a continuation of low inventory levels carrying over from 2021 into this year and probably through most of the year. And with low inventory levels and buyer demand, it's really going to continue to drive prices up. Not as crazy as it was in 2020 into 2021, but they're still looking at increases in prices. So in our region, in the Washington, D.C. metro area, we're looking at about 5.5% price increases on homes. That also, in addition to increases in rent. So the prediction is really that rents are going to go up even more than housing prices at about 7.1% is what is predicted for rents. So if you're an investor, it's a good time to be jumping into this market, into the real estate market now, because we'll see some continued increase in rents as we go forward. So if you're a landlord, the good news is that rents are going to continue to increase. But what that means is that you really need to stay on top of what your rent is and how are you keeping up with the market. So if you've got a tenant in place and they've been there a long time and you haven't done a rent increase, think about having a professional do a rental analysis for you so that you know really what you could get. And maybe you increase the rent to that much or not. That doesn't matter. You just really need to know what the market rent is so you can be a savvy landlord. Okay, let's talk about investors next. We're absolutely seeing investors in our market. We've seen a lot of people come in with a lot of cash. Washington, D.C. is definitely an appreciation type of market. It's tough to make cash flow here unless you're putting a significant amount down. But we're seeing a lot of buyers buy with all cash, definitely putting large amounts down. For those people, they can make the cash flow work. But if you're just putting a 20% down, the rents are not quite going to be where they need to be compared to your mortgage for you to get positive cash flow. There are other markets besides appreciation markets. There are cash flow markets. And so those markets are typically less, in more B and C cities, but they have lower prices, lower rents, but you don't need as much to get into those markets to play the game. And you can generally get a few $100s of cash flow in those kinds of markets. So wherever you go, there are opportunities. We're definitely seeing investors get in. Why? Because interest rates are low. Because, as I mentioned, appreciation in whatever portfolio they may have, it's easy to get money out and buy something else. Also, the stock market, people are looking to diversify. They've seen great increases in their money in the stock market. They've also saved a lot of money because nobody's been traveling, and other things that people are generally spending money on, people weren't. So people have a little bit more money, and we're seeing them put that into real estate. It's a smart move. So it's something you definitely should consider. If you haven't made that jump into real estate yet, think about it. So for me, I am bullish about 2022. I think there's going to be some great opportunities, whether you're a buyer, whether you're a seller, no matter what. In every market, there are opportunities. You just have to look for them. So find the right partners, do your homework, stay up to date, and you'll be successful. So I hope this video is helpful. And if it was, share it with someone else you know, and please subscribe and ring that bell so you'll be notified every time we post a new video. We'll have some great content coming up this year. Thanks for watching, and I'll see you next time.